Spirit Airlines' bankruptcy is a cautionary tale for the aviation industry and its stakeholders. While the airline works to restructure and recover, the immediate consequences for consumers and shareholders are far from positive. Travelers may face fewer options and higher costs, while investors are likely to see their equity wiped out. For both groups, Spirit's downfall underscores the importance of preparation and diversification. As the airline industry continues to evolve, the Spirit saga serves as a reminder of the risks inherent in chasing low fares or high returns. Whether you're a budget-conscious flyer or a bold investor, the lessons from Spirit's bankruptcy are clear. Proceed with caution. How Spirit Airlines bankruptcy could potentially screw over consumers and shareholders. Spirit Airlines' recent bankruptcy filing marks a dramatic turn for the ultra-low-cost carrier that once promised affordable air travel. While the airline seeks to restructure under Chapter 11, the fallout is set to hit both consumers and shareholders hard. Here's a deep dive into the ripple effects of Spirit's financial turmoil and how it's likely to impact these key groups. Consumers. The loss of low-cost travel. Options. Spirit Airlines carved its niche as the go-to airline for budget-conscious travelers. Its model based on offering rock-bottom base fares while charging for extras democratized air travel for millions. However, the bankruptcy announcement was thrown that affordability into question, leading to several concerns. One concern: fewer choices in the low-cost market. Spirit's financial troubles could shrink its operations, including the potential elimination of routes or markets. This would reduce competition, especially in smaller cities where Spirit provides one of the few affordable options. With fewer players in the budget sector, consumers may face higher rates across the board. Number 2, rising ticket prices. Bankruptcy often means cost cutting, and Spirit may look to recoup losses by adjusting its pricing model. Historically, bankrupt airlines have moved away from aggressive discounting, leaving travelers to shoulder high costs. Without Spirit's low fares keeping competitors like Frontier or Southwest in check, the broader market could see a price surge, cancellations, and service disruptions. Number 3, though Spirit has vowed to maintain operations, history suggests that bankrupt airlines often experience operational instability. Delays, last-minute cancellations, and reduced consumer service resources could become the norm. As the airline struggles to meet financial obligations, travelers will need to brace themselves for potential headaches at the airport. Number 4, loyalty program devaluation. For frequent Spirit flyers, the airline's Free Spirit loyalty program may lose value. Bankruptcy often results in restructured or diminished reward programs, leaving loyal customers with fewer benefits. Travelers relying on accumulated points for future trips, could find themselves empty-handed. A decline in customer experience. Cost-cutting measures could extend to maintenance, staffing, and customer service. Spirit's bare bones model already leaves little room for luxuries, and further reductions could result in poor passenger experiences, from long wait times to overbooked flights. Shareholders, a financial wipeout. For Spirit Airlines shareholders, the bankruptcy filing spells almost certain losses. Here's how. Stock value plummets. When a company files for Chapter 11 bankruptcy, its stock typically becomes worthless. Spirit Airlines' shareholders are no exception, with equity holders likely at the back of the line for compensation after creditors and bondholders for investors. This represents a total loss of capital. Failed merger opportunities. Spirit's bankruptcy follows the collapse of merger talks with both Frontier Airlines and JetBlue. These deals could have infused Spirit with much-needed capital and resources. Instead, regulatory hurdles and internal challenges derailed these lifelines, leaving shareholders with nothing but missed opportunities. Increased risk for airline investors. Spirit's downfall highlights the volatility of investing in the airline sector. With high fixed costs, low margins, and sensitivity to economic shifts, the airline industry is inherently risky. Spirit's bankruptcy serves as a cautionary tale for those considering investing in ultra-low cost carriers. A weak recovery outlook. While some companies emerge stronger post-bankruptcy, Spirit's prospects remain uncertain. The competitive low-cost market, rising operational costs, and weakened brand reputation could hinder the airline's ability to bounce back. For investors hoping to recover or hoping for a recover play, the odds are not in their favor. The broader implications of Spirit's bankruptcy. Spirit Airlines' struggles are not just a story of one airline's financial mismanagement. They reflect larger trends and challenges in the aviation industry. Consolidation in the airline sector. Spirit's potential downsizing or liquidation could pave the way for further consolidation among U.S. airlines. Larger carriers may absorb Spirit's market share, reducing competition and leaving consumers with fewer options. Pressure on other low-cost carriers. Spirit's bankruptcy may signal trouble ahead for other ultra-low-cost airlines. With rising fuel costs, labor shortages, and economic uncertainty, these carriers face mounting pressure to maintain profitability. Travelers may see fewer budget options in the coming years. Consumer confidence erodes. Spirit's reputation was already mixed, with customers often criticizing its no-frills approach. Bankruptcy further erodes consumer trust, making it harder for the airline to attract passengers post-restructuring. Regulatory scrutiny. The collapse of Spirit's merger talks and subsequent bankruptcy could prompt regulators to take a closer look at the financial stability of airlines. Future mergers and acquisitions may face increased scrutiny to prevent similar scenarios. What can consumers and investors do? What can consumers and investors do? While the fallout from Spirit's bankruptcy is largely beyond the control of consumers and shareholders, there are steps both groups can take to mitigate losses. For consumers, monitor your bookings. Keep a close eye on your flight status and consider purchasing travel insurance for added protection. Use your miles ASAP. Redeem loyalty points while you still can to avoid losing them in case of program changes. Explore alternatives. Compare prices with other airlines and be prepared to switch carriers if Spirit's reliability declines. For shareholders, diversify your portfolio. Avoid overexposure to high-risk industries like airlines. Diversification can help offset losses. Stay informed. Follow updates on Spirit's restructuring efforts to assess potential recovery opportunities. Consider professional advice. Consult a financial advisor to evaluate the best course of action for managing your investment. So that was a story all about how Spirit Airlines' bankruptcy could potentially screw over consumers. This is Awesome Will here. I hope that you have enjoyed. Be sure to like, share, comment, and also subscribe to the channel. Thanks for watching. Catch you on the next one.